Hi there, my name is Ryan Coe. I'm with Soar Financial. I am here to introduce the first company for this morning. We have Latin Metals, Keith Henderson. If you would like to come to the stage to talk about Latin Metals. It's a prospect generator with projects across Peru and Argentina. And here we are, we have Keith Henderson.
Thanks, Ryan. As Ryan mentioned, prospect generator, it's a little bit of a different model in the exploration world, and we're focused on South America only and Peru and Argentina at this time. Before I get started and get too deeply into the details of what we're doing, I'd like to just focus a little bit on share structure. I think it's such an important part of what all of these companies are doing and speaks to ultimately the potential of the company. In our case, we've got 109 million shares issued and outstanding at this moment. Unusually for us, 45% of that is sitting with management and board, and those are fully reporting 45% shares. But perhaps even more importantly, 42% on top of that is sitting with some fairly major shareholders, some long-term shareholders, and some kind of famous market participants, the names that you would be familiar with. So in reality, we've got basically 15 million shares that are actually trading at any point in time, and the rest is basically a non-trading block. So it's an extremely tight company. In terms of what we're doing and what we spend as a prospect generator, we don't need to spend very much money. We're operating the company on about $2 million per year. And that generally comes, about half of it will come from contributions from our partners who are giving us cash. And about half of it will come from a financing, which we do annually. And we've just announced, and we're closing next Tuesday, a $1.3 million financing. And that will be it for at least a year, and possibly for quite a bit longer, because ultimately we have potential to become self-funding with cash coming in from partners. We currently have option agreements in place with partners like AngloGold Ashanti for a total of $80 million of non-dilutive investment into Latin Metals and the projects. So that comes in the form of cash payments to us, but also mostly in the form of dollars in the ground, exploration completed. And so for 2025, we're expecting about $19 million of exploration dollars to be spent by our partners. And that contrasts with the $1.3 million that we've just raised. So basically $19 million spent for every $1 million that we have raised to support it. If you're not familiar with the prospect generator model, let me just give you a quick high-level overview of that. The really key core competency here is geology and having the ability and the talent in the company to identify the best possible projects. Because I can assure you that to attract investment from companies like AngloGold Ashanti and other majors, you need to have really, really high-quality projects. What we do is decide on where the projects are that we want to look at. We acquire them, we do a little bit of initial work, and then once we get to the point where we think we have identified interesting targets, we go and talk to partners and we try and secure an agreement with those partners. From that point on, we're not spending anything on the project. The partners are funding everything, all the really high-risk stuff, all the really expensive drilling. And ultimately, if the project's successful, we benefit from that by having at least a minority interest or a royalty interest. And that's really an advantageous thing for us. We're looking at asset-level dilution rather than diluting the shareholders with constant kind of funding of our own projects. This slide, just to give you an idea of what it takes to create an opportunity like this. It's a long and tiring process. It's taken us 4 to 5 years to get to this point. We had to find the projects. We had to do the work. Once we got the results and thought that we had interesting projects, we had to go and find partners. We had to agree commercial terms. We had to get agreements in place. And then once the partners come, in many cases, you then have to go through a permitting process. And all of these things take time. There's no way to make this into a shorter period of time. But if you're being introduced to the company today, you have the advantage that this 4 to 5 years of work has already been completed. We have 3 major catalysts this year with projects getting drilled by our partners. And this is a wonderful time to be introduced to the company and to get a relatively low-cost entry point into what Latin Metals is doing. This is just a look at the number of projects we have. I think in total we've got 19. 2 of them on the right-hand side of the chart are already optioned out. Others are in discussions with companies to be optioned out in the very near future. But at the left-hand side of the chart, we always need to be introducing new projects. So we're constantly looking for projects, putting them into our pipeline so that ultimately we can grow this company and our project base to be bigger and bigger. Because we really don't spend the money, the big money that's required to do the exploration, there's actually really no limit to how many projects we can have. As many projects as we can feed in and for which we can find partners will just ultimately be increasing the number of catalysts that we have. So I'm going to speak to you about 4 of our 19 projects today. And that's really just a time limitation, but I'll focus on the ones that are really the catalysts for this year. The first one I want to speak about is the Orgonuyo Gold Project, which has been optioned to AngloGold Ashanti. AngloGold can earn an initial 75% interest by spending $10 million on the project and by paying us cash of $2.5 million. But it's really what AngloGold are looking for that's most interesting for me. This is a project that's actually been explored by some other people in the past. They mostly focused on a very small former producing mine called Julio Verne, which was high-grade gold and bismuth. And everyone took the same approach and they went and drilled right there. And they got some interesting results, like maybe 130 meters at 0.2, but ultimately they never really found the big one. AngloGold have got a completely different view of this project. And you can see all the white dots on this map. This is the permit that they've submitted. We expect that permit to be issued within 2 to 3 weeks, and we expect AngloGold to start drilling thereafter. A target size of 5 million ounces or more is an enormous hurdle rate. For us, the fact that AngloGold even believe that to be a possibility is extremely interesting, and it shows ultimately the quality of our exploration project. And if they're successful, it should be completely and utterly transformational for the company. Their technical analogy is the Salares Norte project in Chile. That's a goldfield project. It's got 4.7 grams per ton gold, close to 4 million ounces. These are the kind of grades and ounces that AngloGold are looking for. And this is one of our major catalysts for the year 2025 drilling, about 7,000 meters planned to be drilled. Moving on to something different, this is the Esperanza Copper Gold Project. It's different because it's not so much a grassroots exploration project as taking something that's been discovered and working to expand it into something else. We discovered this project when we drilled it in 2018. We intersected from surface 387 meters at 0.57% copper and 0.27 grams per ton gold. And at that time in Q1 2018, this was the 3rd best copper intersection globally, and that didn't even take account of the gold credit. That was just based on the copper alone. So a very, very significant intersection, a real discovery, and from surface, as I mentioned. It's wide open at depth. It's wide open in many directions. We've optioned this out to Mashiko Resources, who you may not have heard of. They're a private company actually based in London in the UK. They're currently mining in the Zambian copper belt. They've got a significant amount of revenue coming as a result, and now they're expanding their operations into Argentina. The photograph on the right-hand side here is kind of fun. It's the project's exposed at surface, so the rocks are so altered that the stream, when you put your hammer in the stream at the project site, the water is so acidic as a result of coming through all the altered rocks. And it's got so much copper that is leached out of those rocks that within 2 to 3 minutes, your hammer gets plated with native copper, which you can see with the colors at the top of the hammer. Obviously, this is a very valuable project, having already had a discovery, essentially. So Mashiko have to do quite a lot and spend a lot of money to earn their interest. And for their initial 75%, they have to spend a little over $7.5 million. Part of that is payments to us, and part of it is payments to an underlying vendor. They also have to drill 65,000 meters of drilling as an absolute minimum, and they ultimately have to produce a bankable feasibility study. So you're talking about $60 to $70 million of expenditure, none of which we're contributing, and none of which we're issuing shares to fund. Cerro Bayo is a silver gold project that we had formerly actually optioned out to Barrick Gold. Barrick did some really excellent work. They spent a lot of money. and they ended up defining 9 drill targets. That project's now back with us. We're looking for a partner for it, and we expect to be able to announce a partner in commercial terms within Q3. We've managed to get this project now drill permitted, so it's drill permitted for 2025, and as soon as that partner is announced, we assume that also we'll be able to get the drilling done in Q4. So this is the third of our projects that we expect to have drilled this year, and part of that kind of global $19 million expenditure. Finally, something a little different and much earlier stage. This is a project we generated ourselves. It's sediment-hosted copper in northwest Argentina. This is something that nobody's really thought about before. And because of that, we were able to identify the belt. We were able to go in there and basically stake about 90% of the belt. So we've got this massive land position of 550,000 hectares. We've been into the field to check what we think we have. We think it's got a lot of similarities with the Zambian copper belt. And as you can see from the photographs on the bottom left, we've been able to identify mineralization, copper mineralization in the right host rocks, in the right facies, exactly what we would hope to see if we were sitting in Zambia today. So this is obviously a very, very large-scale project. We'll be hoping to bring in a major mining company who will be able to apply the necessary resources to move this forward. So I'm almost finished. Just before I do finish, I want to have a chat about really the model and how it compares to how other exploration companies are doing it, and how you as an investor can maximize the value of every dollar that you're investing. One of the questions I get asked the most by investors is, how do investors determine whether companies have got good projects or bad projects? Now, you're lucky you're here at a pretty high quality show. I can assure you that every company here has been carefully vetted by Kai and his team, and you're sitting talking to very good quality companies. But if you were to fly to Vancouver, you could probably find about 1,000 other companies who claim to have the best projects in the world, and that may not be true every single time. If in our case, our partners come, people like AngloGold Ashanti come, they do a significant amount of work on the ground. They go and look at the projects, they look at all of our data in detail, and they decide for themselves, as a much larger investor than any of us, that they think this is a good project. And so as an investor, to some extent, you can use their opinion as a proxy for your opinion. With standard exploration, you'll often see a company with 1 or 2 projects. With a prospect generator, we've got 19 right now, we're still growing. It's not unusual to see 20 or 30 projects, and therefore multiple catalysts coming every year, as opposed to just maybe 1 or 2. The fundamental problem with standard exploration companies, though, is that they've decided to fund their own exploration. And when you fund your own exploration, you know that the company you're investing in will be financing it over and over again. And there's nothing necessarily wrong with that, but with a prospect generator, you know that we're only going to be financing from time to time. It's going to be small amounts, and we ultimately have the potential to become self-sufficient in cash terms, or even revenue generating from royalties. So that's a really big advantage. Obviously, the risks are high in exploration. We all know that. We also know that the rewards are fantastic if you're lucky enough to find something. If you've only got 1 or 2 projects, you're only getting 1 or 2 opportunities. If you're with a prospect generator and there's 20 or 30 projects, you've got way more opportunities every year as your partners are kind of successfully drilling and hopefully finding something. But I think most importantly, the early investment in a standard exploration company might start to feel like you're getting punished in the end because of all the financings. You get so heavily diluted. Whereas an early investment in a company like Latin Metals, you know that you're not going to get diluted endlessly. And so you can be rewarded by having made that investment at a very low entry cost. So I'll finish there. I just want to put our 4 catalysts up on the screen so that you can remember what they are. AngloGold drilling soon, 7,000 meters, looking for 5 million ounces. Mashiko looking to expand the existing discovery at Esperanza with 5,000 meters planned for this year. We hope to get a partner at Cerro Bio, and if we do, we've got a drill permit, and we would expect to see drilling there in Q4. And then different types of projects like our early stage area play in copper, where we've just got a massive land position and a really, really interesting opportunity. So I'll leave it there. If anyone's got any questions, I'd be really happy to answer them for you.
I'm a bit curious of the cost structure of prospect generation. So you said that your burn rate is $2 million per year.
That's correct.
How much of this is salaries and how much is expenses in the field, like ranging and basically also on the revenue side, it means that on average, if you auction out at least one project, you're in break-even basically, because you get a couple of million when you auction out a project, right?
Yeah, we tend to get initial payments in the $350,000 to $500,000 range, but more payments are coming. So we probably need 2 or 3 projects to be active in order to be breaking even. In terms of expenditure, I can't tell you exactly, but generally it's costing about $1 million to run a public company in Canada these days. That includes our salaries, our small management team, Vancouver office, a small office in Argentina and a small office in Peru. And then the other half of that money, the other 50%, would go towards generating projects, doing early stage exploration and getting them to the point where they're ready for an investor to come.
So you said 1 million is just for compliance reasons? To have
Well, salaries, office, everything. It just, yeah.
Thank you.
Okay, and we need to move on. So thank you, Keith.
Back to you later.